Hi, welcome to the Market Alert for Thursday the 18th of June 2015. And starting off in the 5-minute chart, you can see in the pre-market session the market fairly quiet. Then at 2:30 you see prices being supported at the 17,950 level once again. And then we have a triple X. And as I've said before, the first hour or so is the best time at the moment for a potential trade to go on to make profits, and this is what we see with the triple X. You can see how the market broke through the 17,900 support, then came back and then bounced off it, and again we see it coming back here as well before eventually going down to the next psychological level of 17,900 for this trade. And down to that point, which took a long time to actually get down to there, was 40 points. And that for me was enough on the day, even though we've got the Fed. You can see here the market reaction again, Yellen coming out full of rhetoric about what she intends to do with interest rates, and there is absolutely no way they are going to increase interest rates. I don't care if she says they're going to. They cannot afford to do so because of the amount of debt that is in this bubble. So here we see us talking the market up. Again, no surprise really. I mean, this market's been talked up for the last 6 years, and QE money pumped into it for the huge banker bonuses. So you can see there how the market was pushed back up to 18,000, that main psychological level, and you can see how prices then drifted back down before the close, because everybody knows that there's no fuel left in this one to actually move the market on to any new record highs at the moment. Plus you've got Greece in the background. Are they going to stay or are they going to go? Again, my opinion is they will come up with a deal before the end of this month to keep them in there. Again, using the cliche these days where the can will have been kicked down the road for the next month when another $1.5 billion debt payment will be due, and whether they can make that one or not. But it's just a matter of time before they leave, as they're running out of money. If you are not aware of this, 1 billion euros were taken out of the banks by depositors the week before last, and they continue to remove their money on the basis that the Greeks are going to come out of the euro as well. So a lot around at the moment on the fundamental side for these markets, but again you can see the hot air there just pushing this market up, and then it drifting back to reality as traders start to see that this market is not much longer for the highs. In the daily charts, again you can see this, how the market rallied up and then came back down. The volume is increased as well, showing that there was some selling around, taking advantage of putting in short positions as well. So any sort of rally up to the upside now is a good sell. And again, I would go at the moment with the potential sell signals, offering possibly more chance of success as well because of this, but only after a rally, of course, and then rally at the start and then sell into it, not after a long down move and then a sell signal, but after an initial up move, run out of steam, and then any potential sell signal after that would be improve the odds of success, because we've got this sort of, even though it's sideways in the longer term, which we can see here, there is certainly pressure on the downside. There's no green bars in these big days, no increase in volume, so it looks like nobody's buying this market. It's just being pumped up with rhetoric as usual. Now at 3 p.m. we've got the Philly Fed manufacturing index. This is reported or forecast to actually come out at 8.1, 6.7 previous, so if this comes out worse, expect more downside pressure. Conversely, of course, they will use this to try and lift the market if the news is as forecast or better. And finally, in the implied volatility, 13 for Tuesday. Let's just refresh for Wednesday, see what the option traders think. 12.8. So the sort of up move before, in the last part of the trading session yesterday, giving this market a bit of a breather. 12.8 down 0.2 on the implied volatility, no big deal really, and again this shown in the chart here. Right, that's it for me for today. I will see you in tomorrow's edition of the Market Alert. Like I say, keep in mind that the Greek effect is still in the background, and any other geopolitical news that might hit the wires can have an effect on the market. But other than that, we just got the Philly Fed at 3 p.m. All the other news will have been factored into the market beforehand. See you in tomorrow's, and as ever, thanks for watching.